If you ever wondered why the banks and how the banks trade forex, this is the video for you, because the banks actually are doing things in the market that retail traders are not trained to look out for, and that's why, for most retail traders, they're losing in the market. So if you watch this video, I'm going to show you three secrets to what the bank is doing to actually put retail traders in a bad position to win. So this is what's happening. If you look at this, this is exactly this little frame right here. This is exactly how the banks look at the market. And you might think that this is, a little bit simplistic, but this is how the banks really look at it. They look at just the support and the resistance, or more so, they don't look at support resistance. They look at buy interest and sell interest. So the first secret is consumer interest. The banks trade consumer interest or retail interest. What I mean by that is, say you have a market that's in an uptrend. So you have a market that's in an uptrend, and what they're looking at is they're looking at when the sellers are going to start to come. So they see that the sellers are getting ready to sell the market, because this is what happens after that. And this is something that a lot of traders miss out on because they're not trained to. But what does a trader think when they see this? If you don't know what that is, that's called a double top. A double top is a commonly traded reversal pattern in the market. And the market makers, or the banks, or the institutions, whatever you like to call them, the treasuries, they see this as well, but they don't see it in the same way retail traders see it. Retail traders see this as the end of a trend. And what the banks see it as is a way to trap retail traders. This is what I mean. So let's just say that the banks want to sell into the market, but people are already selling the market. Think of it like a supermarket. If you're shopping for your family and you want to buy apples, there's going to be enough apples in the supermarket for you to buy that they're selling for you to feed your family. But let's just say the second person is shopping for a restaurant chain, and the second person has to buy 1,000 times more apples than the person who's buying for their family. Are they going to be able to buy it at that market? No. The banks are like that supply chain shopper for that business. They can't just simply go anywhere and buy or sell the market. Certain conditions have to be met, because when you trade, the opposite of selling is buying. And what that means is that someone has to be buying for you to sell, and someone has to be selling for you to buy. So back to this example, people are starting to sell here. So if everyone is seeing this and starting to sell here, is there going to be enough positions, buy positions, interest for the banks to place their trade? It's not, because everybody is looking at the sell here. So what does the banks have to do? The banks have to change the market perspective, even for a slight moment, to get people to think that instead of the sell, the market is going to buy. So what do? They do what is commonly referred, and this is secret number one. Secret number one is a stop hunt. And a stop hunt is when the banks corner the market and manipulate the market to reaching the common area where people's stop losses are. So if we look here, if people are selling here, they're selling where this 5 is. Where is their stop loss most likely going to be? It's going to be above that last high. So a stop loss is going to be up here. That's where most people's stop losses are. When they sell here. So when they sell here, their stop loss is going to be in the same place. So you got two areas of selling, but their stop loss is going to be in the same general area up here. If someone is saying, because there's resistance traders and then there's continuation traders where they're placing buy stops. And a buy stop is usually they'll set a line and they're saying that they're going to buy up here. They're not buying at this point. They're going to buy if this high is broken. So this is a buy stop common area, because a buy stop is commonly placed over areas of resistance. So this is the area of resistance. The buy stops are going to be in here, because if this area of resistance is broken, commonly taught knowledge is that the market is going to continue up. So there's people placing buy stops. Here's the difference between the banks and the retail traders. And this is the second secret. The first secret is consumer interest or stop hunts. Consumer interest. Secret number 2 is what's called mitigation. What's called mitigation. So consumer interest and mitigation. So if we look at this, this is what this will look like. So you got people who are selling in this area where these circles are. Their stop losses here. Their stop loss is a buy order. Then you have people who have a buy stop here, waiting for the momentum to continue in the upward side. That's another buy order. There's one more buy order. And that buy order is a commonly known method as breaks and retest. So what a break and retest is say if the market continues up here, goes past the resistance, and then retest here. What a lot of traders are going to look for is that continuation up. So a lot of traders are going to look for that continuation up. So what are they doing when this retest happens? The third commonly used trading method, the break and retest, they're going to place a buy here. So that's a third buy. It's a third buy. So now this is what the banks see. You're seeing that this is a seller's market because the market is here at this point. It's at this C leg right here. The market has had an uptrend. There's a double top. There's this little C leg. What the market makers and the banks are looking at is that more people are going to sell if the market stays right here. They need to get it to where more people are going to think that the market is going to be buying or is a good area to buy, or the market is going to continue going up. Nobody's thinking that the market is going to continue going up in this area. So what do is they do something called the stop hunt, and they also mitigate into a position. So what they're doing is they're buying into a position. They're buying into a position there. When they're buying, they're making an investment in their own trade because they ultimately want to sell. They want to sell, let's just say it's a 400,000 units of sell orders. So they want to sell 400,000. That's their goal. Pending order, 400K sell orders. And they justify it would take a buy of let's just say 50,000 buy orders to move the market, into the area where more people are going to be buying than selling. Because if they can get the market up here, you're going to have three types of buying happening. You're going to have the buy stop happen. You're going to have the people who are selling here and they hit their stop loss. And then you also have the people who are waiting on a retest to place their buy. So there's going to be more buying than selling at this area. So they got to get the market up there so they can ultimately bring the market down and make their sell, because when they place their sell, it's going to be a big movement. And I'm going to show you what this looks like on the live charts. But the banks have to do something like that for them to move the markets the way they like to, and for them to participate in the markets, because they have much bigger orders to make. So let's look at the live market, and we're going to find where this happens. So let me find an example. And they're usually pretty subtle. So right here, this would be a better example. Right here. So let's zoom in and just look at this. Let's just look at this. So you have what's called a resistance here. Your resistance is here. Resistance is usually areas of equal lows and equal highs. And support is equal lows. So you see this resistance here. The banks also see it. And the banks are looking at, there's actually two areas where they're doing this. The banks is looking at that the market, the people that are buying and selling into the market, they're looking at this as a break and retest, because if you look here, there was resistance there, and they're looking at that break and retest for the market to go down. That's what retail traders are looking for. So the banks know that retail traders are greedy and they're impatient. They like to over leverage, and they use that to their advantage. So they'll put the market in a favorable position to sell, but they'll slow down the market. So you might be selling here and they slow down the market. So this is your sell in this area, the retail sell. But if you're selling there, what is your stop loss most likely going to be? Especially if you're an inexperienced trader. You're greedy. You don't want to lose much money, so you're going to have a stop loss that's not that high. So this is the retail stop loss. So everybody is seeing that this is a selling trend. This is a very easily selling trend. Everybody's seeing that. So do the banks, but they know that since everybody is in this sell trend, they're not going to be able to place the order that they want. So what they have to do is they have to buy into the market. So as you see, right before this big sale, something unique happens, and that is buying into the market. So they buy into the market here. They buy into the market, and they hit people's stop losses so they can ultimately make their sale. So the third secret is they buy to sell and they sell to buy. So if you notice, before every little major move, there's this last little up move before the major move. Any type of major move, there's an up move right before it. So you got this one. See how I did it here? Equal highs, they went up and then they sold and they continued to sell. Every little move started with a slight stop loss. So if you can catch the big moves by catching what the banks are doing, you can essentially do, what everybody's trying to do at certain times, which is sell in downtrends and buy in uptrends. But you're doing it at the level where The banks, you're trading with the banks. And if you trade with the banks, then that's what you're going to be able to do and be able to profit at a higher level. If you want to, hopefully this helps. And if you want to learn exactly the full spectrum of institutional trading, click the link below, go down to wallstreetmoses.com, and we'll be able to teach you exactly how to trade with the banks.